Explosives maker Incitec Pivot's profit has been a bit of a damp squib. Earnings for the first half were down 22%. Its bottom line took a direct hit from the group's fertilising business. The company is now banking its future on a change of strategy. David Taylor has the story.
It's a company facing a bit of an identity crisis. Incitec Pivot struggling to find its place in the market with two very different businesses. The group's main divisions, fertilisers and explosives, both produced very different results.
I think it was a mixed result, and it was a case of a good result in explosives and a poor result in fertiliser.
Explosives earnings were up 21% to $177.5 million on the previous corresponding period. Earnings from Incitec's fertiliser business, though, were down 56%. Part of that poor performance relates to an ill-timed purchase of fertiliser stock from the United States.
Well, the impact was we did actually buy some high-priced fertiliser, and of course in the business, being a leading supplier of fertiliser up and down the East Coast, it actually means that we do need to buy ahead of the season. And occasionally when you do that, you'll mistime the purchase of fertiliser and have margin compression associated with that.
Overall a disappointment. We saw a $60 million drop there in earnings on the previous comparable period, most of that driven by the fertiliser business. And while we knew that urea prices globally had fallen, the impact on Incitec Pivot's bottom line was quite significant. That 13% overall drop in net profit, a cause for concern.
Analysts say the group's been overexposed to a segment of the market that's renowned for its inconsistent earnings and volatility. In response, Incitec Pivot's now looking to gain more exposure to the explosives market. The company provides the dynamite that mining companies use to blast for precious metals supporting Australia's economy.
And that strategy is to invest in explosives where we can grow stable, predictable earnings by having leverage to the industrialisation of Asia, in particular China.
Like many Australian companies, Incitec Pivot is looking for a less volatile earnings stream. That, the company hopes, can be found in the mining sector. The market is unconvinced. One growth initiative the market is counting on is the Moranbah ammonium nitrate plant due to open in July. It's a key part of the company's strategy to push further into the explosives market.
We're very comfortable with our market positions. We've got long-term contracts from our Australian explosives customers. We've got a very good position in the Americas with the US economy continuing to come out of the global financial crisis, so we're very well placed to grow earnings into the future.
Michael McCarthy, though, still has questions around the timing of the company's decision to gain more exposure to the mining sector.
There seems to be some rationale behind it in that the explosive business is highly leveraged to the high growth area of the globe, that is Asia. And for that reason, a shift towards that high growth region does make a lot of sense. It does beg the question, though, why has Incitec Pivot taken so long to discover this?
The market's now waiting to see if Incitec Pivot can finish the year with a bang.